Hi, I'm Lindsay Dutch, and this is what you need to know about REITs. REITs, real estate investment trusts, are companies that own, operate, finance income-producing real estate. So that's office buildings, that's apartment buildings, that's malls, that's data centers, and even self-storage, just to name a few examples of the 14 different property sectors within real estate. REITs were created in 1960, and they were created as an opportunity for individuals, retail investors, to be able to invest in commercial real estate, which previously had really been cost prohibitive for most. Today, there are about 1,100 REITs in the US, and they have a combined more than $4 trillion gross asset value based on data from NAREIT. REITs offer diversification to a traditional investment portfolio because their returns are not necessarily correlated with the broader moves in the market. REITs are also very well known for their dividends. REITs are required to pay out 90% of their taxable income in the form of a dividend, but most of them actually pay out 100%. So this dividend and the underlying value of the properties that these REITs own is really what ties the performance to interest rates. So when interest rates come down, REIT stock prices typically move higher, and that's because their dividends and theoretically the property value that they own is moving higher and it's becoming more valuable. So the interesting thing about covering REITs is they're often lumped into one big bucket of commercial real estate, but it's really fun to dive into the different sectors because many of them have different things going on. So if we think about 2025, residential has been pretty volatile since COVID, but 2025 presents opportunity for an acceleration in rent growth that we haven't seen in some time, with the coastal markets outperforming Sunbelt. If we shift gears sort of towards retail has been very strong coming out of the COVID pandemic. Brick and mortar stores have really seen a strong comeback, and we're seeing steady, if not accelerating, growth for that sector. And last but not least is office. In office, there is really a shift to quality. So the highest quality, well-located buildings, we are seeing leasing happening at those buildings. And so an opportunity for improving fundamentals, which is really occupancy, rental rates, heading into 2025, whereas the lower quality buildings are going to face some continued pressure. We could see additional vacancy and pressure on rental rates for those lower quality buildings. And this dynamic is actually very similar to what happened to malls several years ago, where there's really a bifurcation in the sector based on quality. I think that the sector will continue to grow going forward. There's lots of different opportunities for new property types. If we think about data centers, which are so important to today when everybody's on their phone, the first data center REIT was listed in 2004. Whereas shopping malls, the first REIT was listed in 1961. So there's opportunity for additional new property sectors to come to market, as well as growth in those classically owned major property types going forward. Thanks for watching. This was what you need to know about REITs.